At IBCanada Group, we are your complete and independent source on the infinite banking concept, serving Canadians from coast to coast.
When we look at insurance, infinite banking, because infinite banking is wrapped inside of a life insurance product, we have to make sure that we are covering off the right amount of insurance that your family needs. It should never be looked at as the tail wagging the dog, where you're saying, oh, I want to deposit or have this total premium, and then that dictates the amount of the insurance. That is a completely wrong way, not only to do life insurance, but also to do infinite banking. And you've probably seen a number of videos out there where it's always done as, well, the client wanted to deposit or pay $30,000 a year, and that's the only focus. No, we got to go back to the insurance need first, and then we create the infinite banking policy after that's done.
That makes sense, as you said, instead of the tail wagging the dog. Because the reality is, we're setting this up, we're calculating from today. So if something happened in the next 6 months to a year, we could have them underinsured as opposed to looking at what things look like 20 years out. So we want to make sure we cover off the needs from right away, and then we do the banking as well.
So this video, even though it's not going to dive at all deeply into infinite banking, it is the foundation that every infinite banking policy needs to be based on, and that is the insurable need of the individual. And in really simple ways, before we get into the math, a really simple way to understand it is if you're between roughly, say, 20 to 40 years of age, you can get between 25 to 30 times your income. So, little math question for you. On $100,000, what's 25 times your income, Glenn?
That's $2.5 million.
Nice. That's why you're on this call. So that is the amount of money that we should be looking at to replace the lost value of that income over a period of time, so that your family is able to survive just as though you were there earning that income. So let's take a look at how we come up with those numbers. We're going to dive into a program that we're going to run through how we come up with the human life value for each individual.
All right, let's get at it.
So, Glenn.
Yes.
We're looking at the calculator that we all use. And we have John and Jane Smith, both in their 30s. And we now need to address, first and foremost, what is their annual income? So since this is a hypothetical person, I'll let you give me the information as to what their annual incomes are.
So let's do some round numbers for each one. So let's say these two met at work in the same position, so similar salary. Let's say $100,000 each.
Okay. Now, on $100,000 worth of gross income, Revenue Canada holds their hand out and is going to take roughly about 25% of that for taxes. So, what percentage would John or Jane want replaced if one of them was to pass away?
Well, they're probably going to have 75% left for living expenses, right? So what's 75,000?
Okay, so then we'll take 75% each. That's the amount of money that they want replaced, which is the after-tax income that they were living on when that person was still alive and providing an income to the family. So here we have their $75,000 a year income. Let me just highlight that for everybody. $75,000 a year for each of them. So my question now is, how many years do we want that income to be paid for? They're both 32 right now.
Well, let's operate as if they're going to do this until retirement age. So let's say another 32 and a little bit years. So 32
Perfect.
years.
So now, 32 years times $75,000 represents $2.4 million worth of lost income for that family, tax-free income or tax after-tax income for that family, which falls into that 25 to 30 times value that we talked about earlier. But there's also other expenses. John and Jane are married. Like every Canadian, probably have a mortgage, and they would like to have that debt paid off if there was only one surviving spouse. So what do you want to put down as a mortgage amount for these people?
We're going to say they live in your neck of the woods. So let's call it a Toronto mortgage of about $850,000.
Excellent. So each of them are responsible for that $850,000.
Mm-hmm.
Now, being like any other Canadian, credit card debt, lines of credits, any other debt these people are holding?
No, let's say about 50 grand.
Okay. So what we're looking at here for everybody watching the video, we've just taken into account their income. We've taken into account the percentage that they're left after paying tax. And then we said that we wanted to replace that over the next 32 years, which would get them both up to age 64, just before retirement. And that came to 2.4 million. But then they have liabilities on top of that total roughly around $900,000. So when we're looking at calculating the human life value for an individual, we're going to add the 2.4 million to replace their income, and we're going to replace the $900,000 to cover off their debts. And when we add those two together, we're looking at $3.3 million, which is slightly more than the 25 to 30 times that we referenced earlier, isn't it?
It is a little bit over that, definitely.
Right. It's not a lot over, and we would have to have a discussion with the underwriter as to why we are insuring for a slightly larger dollar amount. But like I said, it's not really over the top, and there's nothing out of the ordinary here. So this gives you an idea that if you're looking for life insurance in general, but specifically designing it in infinite banking policy, that we would be looking at designing a policy that is going to cover you for the human life value, not just the dollar amount that you want to deposit. Because if you went that route, you would likely end up with dramatically less insurance and not ensuring that your family is going to be taken care of. Is there anything on here, Glenn, that I didn't address that we wanted to get a little bit deeper into?
You know what? Right now, let's just say their situation where it's just the two of them. They haven't started a family just yet. They're working on that. So we'll just go to what we've got right now. But
perfect.
Yeah, we've got that 3.3 million showing. So we have some adjustments to make or convincing of the underwriter to do.
Exactly. So this is really important for people to understand that when you look at any statistics, the vast majority of Canadians are underinsured. And the reason why they're underinsured is because we have been taught to look at life insurance as a death benefit only. And since you don't benefit from it because you have to have died, it's only money that you're leaving over to your beneficiaries. And because we look at it as a death benefit, it becomes an expense, and nobody wants to pay more money for an expense, do they?
No, especially when you've got that $850,000 mortgage. Not appealing.
Exactly. So the problem with term insurance, which is where most people are going to focus their attention, less than 2% of term insurance actually pays out a death benefit because it covers people during the period of their life when they're least likely to pass away. And the great thing about the way we use life insurance for infinite banking is we turn the insurance from a death benefit to a living benefit. And now we can insure the people for the right dollar amount and have that money being used as a living benefit while they're alive.
Much more willing to spend to put out the funds for that. And of course, a whole more appealing prospect, right? You get to enjoy this while you're alive, and then your family gets taken care of when you go.
Exactly. It is. If everybody does this properly, every Canadian will be properly insured, and you won't have those GoFundMe sad stories that we hear about all the time.
Yeah, it's I mean, luckily that's available these days, but really it's a popularity contest. And do you want to base your family's financial future on how popular you may be at the time? I don't.
Exactly. One thing I did want to bring to light in this section right here, sources of cash, this would be the money that you've set aside for your future. We do not want to tap into that. So if you've got, RSPs and, real estate portfolio, et cetera, we want those off to the side. We are specifically looking at replacing the lost income and covering off the liabilities.
Fair enough, because let's face it, if you've got a plan as a family to hold on to some of that stuff, when one person goes, you don't necessarily want to sell and have a fire sale, especially if it's a down market for whatever you're holding, right? So
exactly,
give the family more options, and as you said, we're just going to purely cover off that income.
So there you have it. That's how, as licensed insurance advisors, we focus in on the insurable need first. After all, as infinite bankers, our first responsibility is to you to ensure that we have insured you and your family in case something happens prematurely. After that, the infinite banking concept then gets put into place. Anything else you wanted to add into that, Glenn?
No, as we said, I like the order of things, right? Make sure we cover off the actual need first, and then let's look at how we want to get things done.
Yeah, I couldn't have said it better. So you're obviously probably going to have some questions based upon how we go through the calculations. Feel free to leave comments down below. Don't forget to like, subscribe, smash that bell. We have a lot more videos coming out where obviously we're going to get deeper into the infinite banking concept. But for now, every discussion that you have with an advisor has to focus first on the right amount of coverage. The concept is completely secondary to that.
Fair enough. That's why we're here, right? Make sure we take care of our families properly. So death benefit, and then we can look at the concept as well. And again, as Scott said, please subscribe, because we're going to have a lot more videos coming out that will help you understand.
A lot.
Yeah, that will help you understand the concept, how it makes sense for your life, and there's going to be some fun stuff. So please subscribe, like, comment, let us know what you love, what you might like to see, and
or what you don't like.
Fair enough.
What you don't agree with. We're going to be doing a lot of stuff where you're likely not going to agree with what we say, and we want you to be able to tell us.
All right, so we appreciate that. Thanks for joining us, and we'll see you soon.
IBCanada Group, your independent authority for information on the infinite banking concept.